Welcome to Vietnamese Dong News, where you receive real and authentic updates about the Vietnamese dong, Vietnam's economy, and the latest developments affecting the VND exchange rate. If you want to stay informed with daily currency developments, make sure to subscribe to the channel and like the video. Today, we have an important daily exchange rate update from Vietnam. And there is a lot to discuss because the Vietnamese dong is continuing to move within a closely managed exchange rate framework. The latest official data shows that on the 19th of August 2026, the State Bank of Vietnam, known as the SBV, set its daily reference exchange rate at 25,598 Vietnamese dong per US dollar. That was an increase of 16 dong from the previous trading day. At first glance, a movement of just 16 dong may appear relatively small, but for currency followers, daily changes are important because they help reveal the direction of monetary policy and market pressure. The Vietnamese dong does not operate under a simple fixed exchange rate. Instead, Vietnam uses a managed floating framework in which the central bank establishes a daily reference rate and allows the market rate to move within an authorized trading band. As of today, that trading band remains plus or minus 5% around the official reference rate, based on the 19th of August reference rate of 25,598 dong per dollar. The applicable ceiling rate for commercial banks was approximately 26,878 dong per dollar, while the floor was approximately 24,318 dong per dollar. This structure is extremely important when analyzing the Vietnamese dong because it means that a daily movement in the reference rate does not automatically represent a dramatic policy change. The SBV has flexibility to adjust the reference rate according to market conditions while still maintaining an overall framework designed to manage excessive volatility. Now, let's compare today's figure with the previous few trading sessions. On the 18th of August, the SBV reference rate was 25,580 dong per US dollar, down 6 dong from the previous day. On the 17th of August, however, the reference rate increased by 25 dong. Earlier in the month, the rate also experienced several upward movements, including a 27 dong increase on the 13th of August. That sequence tells us something important. The dong's exchange rate is not moving in one perfectly straight direction. Instead, the reference rate is being adjusted gradually as authorities respond to changing market conditions. This is exactly why daily analysis needs to focus on the broader trend, rather than treating one individual session as proof of a major currency transformation. Looking at market-based pricing provides another layer of information. Mid-market data on the 19th of August showed the US dollar trading at roughly 26,171 to 26,185 Vietnamese dong, depending on the timestamp and source. Trading Economics also reported the USD VND rate around 26,180 on the 19th of August, with the exchange rate showing only a small daily movement. Commercial bank rates provide an even more practical perspective for people actually exchanging dollars. Vietcombank's published rates on the 19th of August showed a USD cash buying rate around 25,970 dong, a transfer buying rate around 26,000 dong, and a selling rate around 26,380 dong at the time of its update. BIDV, another major Vietnamese bank, showed a dollar rate of approximately 25,990 dong, with its published figures explicitly described as reference rates that can change with market conditions. These differences are normal. The official reference rate, interbank rate, commercial bank buying rate, commercial bank selling rate, and international mid-market rate are not necessarily identical. Each serves a different purpose. Therefore, when you see a headline saying that the Vietnamese dong is at a particular number, it is always important to ask which rate is being discussed. For Vietnamese dong followers, this is one of the most important lessons from today's update. A movement from 25,580 to 25,598 dong per dollar does not mean that the currency has suddenly been revalued or that a completely new exchange rate system has been introduced. It means the official daily reference rate moved modestly higher. The immediate question is whether this gradual movement could continue. In the short term, several factors will matter. One is the strength of the US dollar globally. Another is capital movement, especially foreign investment and portfolio flows. Vietnam's trade performance is also extremely important because exports generate foreign currency earnings, while imports create demand for dollars and other currencies. Vietnam's economy has a strong manufacturing and export component, and that gives the exchange rate an important role in maintaining competitiveness. A dong that becomes significantly stronger can make imported products cheaper in domestic currency terms, but it can also make Vietnamese exports relatively more expensive for international buyers. On the other hand, excessive dong weakness can support export competitiveness, but may increase the domestic cost of imported fuel, machinery, technology, and raw materials. That is why monetary authorities generally have to balance multiple objectives at the same time. They need to support economic growth, while also watching inflation, financial stability, liquidity, interest rates, and exchange rate conditions. Vietnam's economic ambitions for 2026 add another layer to this challenge. Analysts have noted that the country's target of very strong economic growth could place additional pressure on monetary policy, because authorities must balance growth, liquidity, interest rates, exchange rates, and inflation. For viewers who follow Vietnamese dong exchange rate stories because of possible future appreciation, this distinction is especially important. A stronger currency can happen for many reasons, but sustainable appreciation is different from a one-time adjustment. If the dong strengthens because Vietnam's productivity, exports, investment flows, and macroeconomic fundamentals improve, that can be more sustainable than a move created simply through administrative intervention. The same principle applies to expectations of a dramatic currency revaluation. There is currently no basis in today's official data for claiming that the SBV has announced a sudden multi-thousand% increase in the dong's value against the US dollar. The actual data shows a managed exchange rate system with gradual daily adjustments. Today's official reference rate is 25,598 dong per dollar, and the market continues to trade around the 26,000 dong area per dollar. That does not mean the Vietnamese dong cannot change in the future. It simply means that responsible analysis should distinguish between what is happening today and what people hope could happen tomorrow. There is another factor worth watching: monetary policy in the United States. Changes in US interest rates can influence global demand for dollars and therefore affect emerging market currencies, including the Vietnamese dong. When US interest rates are high relative to other economies, capital can be attracted toward dollar-denominated assets. When expectations shift toward lower US rates, pressure on emerging market currencies can sometimes ease. However, the relationship is not automatic. Vietnam's own economic performance, foreign exchange reserves, trade balance, inflation, domestic interest rates, and capital flows also matter. That is why investors and economists typically look at several indicators instead of relying on one currency chart. Vietnam's banking sector is another important part of this story. Major banks continue to publish exchange rates throughout the trading day, allowing businesses and consumers to see different buying and selling prices. These rates can change without notice as market conditions change. For businesses involved in imports and exports, these fluctuations can directly affect operating costs and profit margins. For ordinary Vietnamese consumers, currency movements can also affect prices indirectly. If the dong weakens against the dollar, imported goods and dollar-priced commodities can become more expensive in local currency terms. If the dong strengthens, import costs can become less burdensome. But the final effect depends on global commodity prices, transportation costs, taxes, business margins, and other economic conditions. In the short term, therefore, the 19th of August update should be interpreted as a modest upward adjustment in the official reference rate, rather than a dramatic currency event. The 16 dong increase is worth monitoring, especially because it follows several movements in both directions during August. The bigger story is the direction of the Vietnamese currency framework and how the SBV responds to market pressure. If the reference rate continues moving gradually higher, analysts will want to know whether that reflects persistent dollar strength, domestic demand for foreign currency, trade-related pressures, or broader global conditions. At the same time, if market conditions become more favorable for the dong, the reference rate could stabilize or move in the opposite direction. Recent data already shows that the rate has not moved exclusively upward. For example, the 18th of August brought a 6 dong decline after the previous session's increase. Looking further ahead, Vietnam's economic fundamentals remain central to the long-term outlook. Strong exports, foreign direct investment, manufacturing capacity, productivity improvements, and stable inflation could provide support for the currency. But long-term currency strength cannot be guaranteed, simply because the economy is growing quickly. A rapidly expanding economy can also create greater demand for imports, credit, and foreign currency. This is why the most reliable approach for Vietnamese dong followers is to monitor the actual indicators. Watch the SBV's daily reference rate, commercial bank rates, inflation, interest rates, trade data, foreign investment, export performance, and broader US dollar trends. These indicators can provide a much clearer picture than social media claims about an imminent currency reset or a guaranteed new exchange rate. Today's update gives us a useful snapshot. The SBV has set the 19th of August reference rate at 25,598 dong per US dollar, 16 dong higher than the previous day. The current plus or minus 5% trading band remains in place, and the commercial bank market continues to show dollar prices around the 26,000 dong level. So, the Vietnamese dong story today is not about a sudden overnight revaluation. It is about gradual movement inside a managed exchange rate system and the economic forces that continue to influence Vietnam's currency. As we move through the coming trading sessions, the key question will be whether these daily adjustments remain relatively modest or whether broader market pressure causes larger movements. The answer will depend on global dollar conditions, Vietnam's economic performance, capital flows, trade activity, inflation, and the policy decisions of the State Bank of Vietnam. For now, the responsible conclusion is simple. The dong remains under a managed, floating framework. Today's official reference rate has moved modestly higher, and there is no confirmed evidence in today's data of a dramatic currency revaluation. We will continue watching the official numbers and separating confirmed developments from speculation. Thank you for watching Vietnamese Dong News. If you want daily, factual, and responsible updates on the Vietnamese dong exchange rate and Vietnam's economy, make sure to subscribe to the channel, turn on notifications, and stay connected for the next update. Remember, exchange rates can change quickly, and projections are never guarantees. This video is provided for informational and educational purposes only, and is not financial advice. Always do your own research and consult a qualified financial professional before making any financial or investment decision.